Well, hello, folks. I'm L.A. Little, and this is your daily NEOTA wrap. We take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week. I do it every Monday through Thursday, live here at 9 o'clock Eastern Time, and archived on YouTube under the channel L.A. Little. If you want to check it out, you can subscribe there. You get updates each and every time a video comes out. We do morning videos, we do these evening videos, and it's worth watching. I do believe will probably help you. As far as these markets and what happened today, if you wanted to quickly review what happened yesterday, these markets went up. They were at critical points today. They were going to give us some more information. They did do that, gave us more information. And that information, if you're bullish, is good. And that is that they want to go higher. Looking at the numbers here, looking at the way this thing is set up, let's grab the right tool. So what do we do here on the composite? 0.5% on the NDX. I would note the Russell is lagging again. It was leading early. Now it's lagging as we're getting farther and farther up. So the Russell's done what it wanted to do. Everything else is kind of catching up, and it's just kind of hanging out. Gold up a little bit. Silver actually reversed and came up 1/3%. Copper down again, and we got bonds. Bonds rising up. You got the 10-year. You got the 20. Almost a full percent there. These bonds just seem to want to go to the moon. Speaking of bonds, speaking of gold, tomorrow I'm going to do a show, Fox News Network. You might want to tune in. It's 4 o'clock Eastern Time on Fox Business. I will be doing a show, showing up there and speaking about the article that happens to be up here on the front page. And let me pop up the front page. And that it appeared on Market Watch. You can read it there. You can read it here. More quantitative easing to come was the question, and they invited me. Fortunately, invited me on to talk about that, and I'll be doing that tomorrow. So tune in if you get a chance. As far as today, let's take a look at these charts and see what we got. So popping into. And I honestly did not get a chance to go through all these. You saw me flipping through them as I was coming on the air, trying to get a feel for what happened. It was a busy day for me. But it was clear to me today that unless we fell at the end of the day, we were going to have a good day, because we did get over those key areas. Remember yesterday, we talked about it was kind of going to be a mixed day. I didn't see any large moves either way, and it was really a slow day until right at the end. And then right at the end, they pushed it into gear and got a nice little push up at the end of the day. That retest regenerate zone, which really had kind of turned into a support resistance zone at the top, they got over it yesterday, and the key is could you get farther? Well, now they are. They're deep into this bar. Once you get that deep, you're going to go for the top. And so that top of the bar is what's gained now, and that also looks like that ABCD structure we talked about the last couple days. It looks like it wants to push right up into it, which takes it just slightly over that bar. Whether it gets there immediately, just runs right up there tomorrow or not, remains to be seen. You could get one more little small pullback in here and maybe set up nested ABCD structures. But certainly, looking at the S&P 500, that looks to be the target now, and that will be the key. Now, that is going to happen at the same time that you get the move over in the NASDAQ Composite and the NDX. And what am I speaking about there? Well, remember last night, this had come back up to try to do a retest, regenerate lower. It was right at the top of the bar. What does it do? Pops over it, keeps going. This thing's going to go back up and try to test these highs, potentially break them out. I expect this is going to get here at the same time that the S&P gets to that breakdown bar. And if they do it right away, which looks to be what they're trying to do, then that's going to set up a very difficult test to get over it, where it probably should pull back. If we look at the NDX, you kind of got the same picture going for the top, exact same scenario going for the highs. And Dow. The Dow is actually, remember the last night, then the Dow was the only one that had kind of uh, decision point in two different ways. It had tested the bottom and held. It was coming back up to do a retest regen off of this bar, got over it slightly, so that looks to be a failure to regenerate lower. That was the test coming in today, and you have an ABCD structure, which is an opposite test, to try to take you up to about 16.833. And so 16.833 here, this was the retest regen. The question was, is which one would win out? Well, on the other indexes, they're telling us that this one's going to win out, and it's actually going to go up there another 100 points or so. That is the Dow, and then of course we've moved over, take a look at the Russell. The Russell has been lagging, and although the others are making their moves, the Russell has been unable to do so. It had the potential for setting up a fairly large ABCD structure, but rather than do that, the Russell has just been eking out very tiny gains while the rest of the market's tacking on 1%, 0.5%. You're getting like 1/10% here. Still got big resistance off this bar from June 5th. Still got decent resistance here in this area, which is going to be that just over this high. Those price points about 11.52. This was 11.54. That's the area. You can see it kind of demarcated here with this resistance zone, this little thin one. That's the big tough one that's going to be hard to get over. So if the Russell works its way up into this area, while the NASDAQ gets to the high, the NDX gets to the high, and the S&P gets to the breakdown bar, then they're all going to be at a critical point, and then it's going to be a question of can they jump it and keep running, or are they going to pull back? And more than likely, I would suggest they probably pull back, stay in range trades for now, but potentially now set up a little bit more of a positive situation, definitely than we've had over the last few days. So that's the indexes. I'm going to pop over to the overseas markets next. I was kind of flipping through these to see what they did as we were starting up the show here. So I want to quickly just kind of run through these and see what they look like. So Australia, so that's a big range trade, right? You got two ranges. It's in the middle, actually on the top half of the range now. The Sensei, the Indian market, going back up to test the highs, also a range trade. Brazil had sold off pretty hard, holds. I do suspect it's still going to break to the downside though. The CAX pops up, and it's starting to come into the heavier resistance. This is going to be the key here. Now, these guys will probably test it tomorrow. Tomorrow's Friday. You got Russia, kind of backing off a little bit again. At least that's what it looks like. That's how the market's reading it. I would expect this thing tries to get into this area tomorrow and tries to get over it. You got some big resistance there, and so that's going to be a tough spot to get over. I would expect that's going to be very hard, actually. So we'll see how that plays out. If we look at the FTSE coming back up and doing a retest regen off this swing point low. And as you can see, these guys, they haven't broken retest regens yet. They're just coming back up, which means they could regenerate back down to the downside. And they're large ABCD structures if they do. Let's just say it comes all the way up, does a full retest regen. It's still a large ABCD structure to the downside. That's the FTSE. The CAX looks the same. And the DAX, let's see what the DAX looks like. DAX has been hurt pretty bad as a result of all the, both the CAX and the DAX as a result of all the sanctions. And now the DAX is actually back into that bar. So the DAX, that equivalent area on the DAX that we saw on the CAX is up here. It's that little red zone you see right there. That's where this is trying to get back to. That's another 200 points higher. So either the CAX is going to get over and into the retest regenerate zone, or it's going to stagnate and this one's going to keep rising. I don't know which one's going to do what, but this one's trying to get up here. The other one doesn't have nearly as far to go. Asia, actually, let's look at my friends up in Toronto next. That's a range trade, and that looks like that's having trouble getting higher. I suspect it's going to fade back in some. Hang Seng, or the 8 shares, the Chinese 8 shares. Okay, so they didn't get to the top. Had a pullback takeaway bar basically last night. The low here at 11.079. And we got the 41 close at 75, so you close under it. This looks like it's going to try to pull back again. So this has set up some sort of a range trade for now. I do think this one's going to try to break to the upside. It looks like it's going to take it until next week to try to do that, though. Let's see about the Hong Kong market, the Hang Seng. And that one actually got to the top, it looks like. 24.9122, 24.9, yep, got over it. Underneath it, that's a failure at the highs. And you tested your high volume bar. That's not what you want to do. That's going to try to pull back. It's going to certainly try to go sideways to down. That's the Hong Kong market. Let's look at Korea. And Korea's struggling as it comes back into the bottom of the big bar. Korea looks like it's going to try to pull back. I'll pop into Mexico. I don't look at it very often. Up at the highs. Japan, the Topix is range trading. It's in the lower half of the range, still holding there, no volume. That also looks like it's going to try to come back in. If we look at Taiwan also, now this one came off hard with the chips, coming back up, no volume. I don't know if you noticed on all those others, they're all coming up with no volume. That never has stopped this market over the last 5 years, but at some point it probably will become important again. But you know, it's worth noting, but it doesn't really mean that much right now. Oh, that's the Hang Seng. I was going to pull up, what was I going to pull up? Pulled up the wrong one. Indonesia. Let's take a look at that one. Boy, that one came off hard. That one's going to come back down to test that low. Okay, so overseas markets, looks like maybe a little bit more bounce in Europe potentially, but looks like Asia is going to struggle. It's like they can't all get on the same page, can they? Okay, let me go over to, I want to pop into the Ox markets real quick, see what that looks like, and see if there's anything different there that's worth noting. So let's look at the currencies first. I'm going to pull up the FXC. Boy, that can't go anywhere. And so with all the problems in Europe, one definite plus for Draghi is he has killed the currency. And that is definitely something he wanted to do. So that actually is what he wanted, and he's got it. These are consolidating. This is the dollar consolidating to go higher. FXE consolidating to go lower. So if you're on the wrong side of those trades, you want to get right, because that's where they look like they're going. And you might want to try to put on a trade if it goes out long enough on a sideways move. Bonds to new highs, over the tops again. This is an ABCD structure to the upside. Got over it, stayed over it. A little less volume. It's suspect, but it looks like it's gonna make a run. Another ABCD up, and it just keeps making them, folks. The weekly still wants to go big. I mean, this is a big ABCD structure, all the way from this low here, back, and up. That's a fairly large structure. Let me get the numbers on this. That's 105.50. 105, so it's about 950. 930, let's say, and then 19 is about 1960. 1960 is going to put it into, on the monthly, yeah, it's going to put it up, it's going to put it into the top end of the range on the monthly. So bonds just keep rising, and this is one of the things I'll be talking about tomorrow. You know, at the beginning of the year, you know, we read about and realized that a lot, one of the members actually submitted a video that there is a regulatory structure, you know, that requires institutions to hold a certain amount of safe assets, and bonds are certainly in that class. That's created, you know, a decent amount of demand, and then you had the Fed with its artificial demand, and that put a crimp on. There just wasn't enough bonds to go around. That's what drove them up early. But now the Fed is tapering is just about done, so they're not coming in there buying anymore. All they're doing is churning what they have, So where's the demand coming from? What's driving this higher? That's a big question mark at this point. Gold and silver. Gold is just hanging up here, trying to get ready to make a splurge higher. Silver actually got a little bounce today, but not much. Silver is in the doghouse, just like we saw with copper. Copper sells down again today. Copper is going back down into the lower end of its huge range, and can't get anything going. Let me see if there's anything else worth discussing. I'm going to run over a little bit on the 15-minute summary, so bear with me here because I didn't get to do prep tonight. So I'm going to quickly just flip through these charts, see what they look like on the sectors, to see if there's anything different here. So IYT into the higher end of the range, over the retest regen. SOX is still going to retest regen, it looks like. XLB is doing a retest regen, and it looks like it will try to regenerate lower. XLE can't even get going. That's a negative. So we got three kind of negative ones. Here's the XLF doing a full retest regen, got over 1, so that's a sideways trend at this point. XLI, that one is just trying to get back into the retest regen, and it's just about actually it is doing it because there was a swing point low over here that just fell off the chart. XLK, so that actually looks like it's going to try to regenerate lower. XLK coming back up towards the breakdown bar. The XLP at the breakdown bar, and this is about where it should fail. XLU coming back in to do a retest regen, can go higher as it does that. XLV going back to the top of the range. XLY, and it's over the retest regen. XLY also over it, and looks like it's going to try to test a high. So you got, look like 4 sectors strong. The other 6 either going to go a little bit higher and then try to pull back, or will pull back. That tells me, again, when we're trying to measure where these markets going, even though they're probably going to make another run higher, right, and get up to those areas that we talked about on the indexes, these sectors are suggesting they're not going to get past it yet. They're going to have to do some sideways consolidation. So tomorrow, to me, looks kind of mixed again, with a bias to the upside. So that's the 15-minute summary that went over by 3. Let's dig into anything that you want to look at or that I care to look at. If you have questions, of course, you can pop them to me. 303-912-9110 is the text. Support at tatoday.com, and we can take emails there, or you can type into the window if you so choose. And that happens if you're logged in. It's easy to get a live stream and log in if you want, so that you can communicate with me live, whichever is your preference. So as I look here, no text message. Let me check my email real quick and see if anybody's popping into support. A lot of messages from Market Watch, of course, with the article over there. And let me glance down through all these and see if I see anything. I don't see anything for support. All right, so let's turn our attention to 2 things I believe that are probably the most pressing, the most important things, and kind of dissect those with respect to where we're going next. I wanna back up, and I'm gonna pull up a monthly chart as well. I want to back up and just kind of talk about the general market, where we are in the big scope of things, and where it looks like we're probably what we're trying to do right now. So let me go back over, and I'm going to pull up the Russell to start with, because the Russell has outperformed everybody on the upside, but the Russell has struggled for roughly 9 months now. It's been quite a while and hasn't been able to get going. So let's start with the Russell. Let's start with the one that struggled, that's broad, but yet has struggled. And let's talk about where this thing is and what it's trying to do. So on the daily, we look at this enough. I'm not going to talk too much more about it. But if I pop over to the weekly, the Russell has basically been in a sideways trend now since October of last year, right? That trend has been in effect now for almost, what do we got? 9 months at this point? 10 months? So 10 months going sideways. Markets at highs are doing one of two things. We always know that they're doing one of two. We just don't know which it is usually, although we can take clues and decide what we think it is. Right? We may be wrong, we may be right, but we can get a decent understanding of what it might be. They either congest at the highs, right, as consolidation. In other words, they're consolidating before going higher, or they will, instead of consolidate, they will distribute. Distribution takes place when the large operators have decided through econometric models, whatever it is that they're looking at, that the market has done all it's going to do, and that the odds are it's going to get worse, not better. That consolidation typically shows up in the form of higher volume spikes to the downside, lower volume spikes to the upside. And if you look at this, for the most part, it's not clean cut. I mean, yeah, there's some higher spikes to the downside, but folks, anytime price comes down, it usually has an increase of volume compared to going up, right? I mean, the way markets go up is they inch, drop, inch, right? I mean, that's usually the way they go up. Matter of fact, if you go back and do the studies, and I've done this before, the largest up moves, the largest days up come what? Right after the largest moves down, right? They always talk about if you're not in the market 100% of the time, you're going to miss the largest moves. Well, so what? You missed the largest move down too. Who cares? It was a wash, right? Most of the time on the way up, it's this little dicey, slow kind of stuff, and then you get a drop, and then you go do it all again. And you see that day after day, right? It just keeps going, and drives you nuts. This market right now, it's not clear cut to me whether this is a consolidation or whether this is a distribution. I can't tell you. So far to me, it looks like consolidation. I don't see distribution. Now we could get a spike down, and that spike down, if it comes, is going to come when you get breaks of multiple swing points on multiple time frames, and when you get consolidation that lasts long enough, whether it's or when you get congestion, I should say, a range trade when it lasts long enough, you end up building up these swing point lows all around the same price points on that time frame where that congestion, that range is taking place. You also build them up at the highs. And that's why the ranges become so important once they're long, because typically once one side breaks, it's a fairly large move in that direction. And a lot of times you'll see technicians, me included, will draw out an equidistant range to the downside. And if you do that, in this particular case, when we're looking at the Russell, you'll see that it's going to come right back into this huge bar, which was a down bar, right, back in July 2013. That bar is kind of the top of that bar is probably where this thing would want to try to go to. And because stocks move faster to the downside than they do to the upside, if it breaks to the downside, I suspect it will get down there fairly fast. Upside, they're a little bit slower. They get a nice big spurt, they get a little pull back, and then they run again. But it would be the same thing. You'd get some sort of an equidistant, move to the top side. And when we're looking at this on a weekly basis, we're talking large numbers. 1082, 1213. It's 135, 140 points almost. That's a big move, right? That's another 10% either direction. That's why this range becomes so important, because it is going to lead to a very large move when it takes place. This is going to become a swing point high this week. You're going to have 2 at the top, 3 at the bottom. Whichever way it breaks, it's going to be a big move. Now, look at the S&P 500. S&P on a daily range trade breaks down, coming back up. Look at it on a weekly. Very different story, right? Whereas the Russell has been testing since October, S&Ps have been just doing an uptrend, right? So very different scenario here compared to there. You got to pull back here about 4.5%, 5%. What do you get here? Same sort of thing. What do you do there? You just go off and make new highs. Is that what's coming? I can't tell you that, but I certainly can look at this chart and tell you that's what's happened over and over and over. What we have to do is keep our ears to the ground, right? Keep our eyes peeled on what's happening and decide whether or not this trend is going to stay that way or if it's going to start moving to the sideways trend. And so that will be the key. We have to watch the weak ones to tell us what the weakness looks like. We have to watch the strong ones to tell us what the strength looks like. And certainly the strongest has been the NDX. If we pop the NDX up, you know, that on the daily, here's the weekly, that is a fairly strong struggle to the top side. And so I would be watching this to see if it breaks out. If it breaks out, just like when you break down on trends, if they start breaking the other way, then you end up getting, usually you get all of them to start to follow. So intermediate term time frame, that's where we really want to focus. That's where you really want to know which way it's going to break, because when that break takes place, it's going to be a larger move, and you want to be on board for the larger moves. I mean, that's where the money's made, and it's usually made at the beginning of those large moves. So if you're not invested already, you have to be ready to move when it's time. And going back to the monthly charts, there are all these strong uptrends, except for the Russell. If we pull the Russell over, put it up, you can see it's been consolidating up there. So which one's right? I don't know. We don't have enough information on that time frame yet. But as we head back up to those highs, we're going to get a clue pretty soon whether they fell there and come back in, which will keep us in that range, or are they simply going to break out and start the new leg up? If you're a bull, you would much rather see them hang in this range for another month or two, build up a lot more, you know, strength, so to speak, to make the run. You don't want to make a, you know, the worst thing you can do after getting sold off, and we go back to the NDX, for example. The worst thing you can do after selling off straight, well, this is probably not the best one. Let's look at something that got hit harder. Here's the S&P 500. The worst thing you can do in terms of being able to continue to move higher is to do this, right? Because how do you keep going, right, if you just come straight back up? You know, do people just keep piling on? Well, to some extent they might pile on a little bit, but then you're going to come back again, so you can't hardly buy this. But if you come in here and you get up to here and then you consolidate for a while and then break out, right, at that point, then you've got something you can work with, because this can go a lot farther. And so if you're bullish, you actually want to see this thing slow down, consolidate, eventually break out, not right away. I'm going to leave it at that. I'm about out of time. I appreciate you being there. You tell a friend, tell two. I'm LA. See you on the Fox tomorrow. Tune in. I'll try to do my best to explain my thoughts as to the ideal of QE4. Have a great night. I'll see you next